Hey everybody, it's Brian Shannon from Alphatrends.net. Today's Saturday, the 9th of December, and we had another positive week for equities. Russell leading the way, up 1%. Actually, biotechs were a little bit stronger than that. They're still laggards for the year, but showing a little bit of relative strength, which is unusual for them. Energy and, of course, oil were lower, so let's take a look at these charts and make some sense of it. On the S&P 500, the daily time frame is undeniably in a strong uptrend. That's why I had pointed out a potential scenario on Wednesday that after we had broken this trend line and come down to this anchored volume-weighted average price, that we might get a bounce and then roll over. Instead, the market gapped higher and the buyers took control. I always want to make sure that if I'm going to short the market, I'm going to short it because the intermediate term and the longer term downtrend are in downtrends. So what I want to look at is shorting in these areas. When we see the market, if it were to have rolled over in here, I might have done a little bit of day trading on the short side, but it's more of an avoid the longs. This level right in here continues to be the key at about 453, 454. As long as we're above that, you give the benefit of the doubt to the buyers. We're still above a rising 5-day moving average. How high it goes is anyone's guess. I'm not here to play those guessing games. I don't do price targets. I look at it and say, the momentum is strong. Perhaps we're going to head. The next point of interest is just ahead right here at 462-ish. And then, of course, the all-time highs, which it had made in late 2021. The Nasdaq is in good shape as well, starting with this weekly chart. Since we have it here, we are above the 10, 20, 30, 40-week moving average, and they're all rising. That's what a bull market looks like. We had some pullback, and now we have the market. The buyers are back in control. So looking at the daily time frame on the left and the 30-minute time frame on the right, we had a pullback this week that came down to the rising 20-day moving average, and we came close to this anchored volume-weighted average price. But the buyers, again, remain in control. We were below the declining 5-day moving average, which to me said, in the intermediate term, guilty till proven innocent. I don't want to be a buyer. But because the primary trend is higher, I don't want to short either. It's all about trend alignment. And that's what I'm looking for. Now we're still in a pretty choppy range here for the Nasdaq. And the good news is it's a choppy range to the upside. We tested the rising 20-day moving average, and the buyers remain in control. Ideally, we get a little bit more time in this little box here, that this high end right in here, and then the low end of the range. We probably don't get down to that, but maybe we come back down to the midpoint of this range in the first couple days of the week and build some energy for a continued push higher in the Nasdaq. That seems most likely, as again, the path of least resistance is higher. Russell 2000, as noted, is showing a little bit of relative strength here recently. They're still above the rising 5-day moving average. Sometimes it's best to look at them in this regard, which is here's the SPY, the Q, the Russell 2000, and the semiconductors. And just based on the direction and the slope of the 5-day moving average, you can see that Russell 2000 has been the leader here just recently. Semiconductors, we'll talk about those on the other time frames. That compressed chart gets a little bit too difficult to read. But here again, we saw that the rising 5-day moving average is still intact. We saw a little bit of a shakeout here on Wednesday as it broke that low and made a lower low. That's just to serve as caution. It's not to get bearish. Breaking a lower low means that time to be cautious, but we have a rising 5-day moving average, so we continue to give the benefit of the doubt to the buyers. In the weekly time frame, we're still in a giant mess, so I'm still not excited about the Russell 2000. There's certainly been some great trade opportunities in the Russell 2000 if that's what you're trading, but more important to me is it has spread out nicely into the broader market. Some of the names we mentioned last week, one was, I really didn't expect it to go, was this Signet Jewelers. I kind of laughed at it because, it's Signet Jewelers. Who expects a stock like that to go? But when you have a chart like this, it's breaking out of stage 1 accumulation into stage 2. It shouldn't be a surprise. And that tells me I need to put my personal biases aside about this being a boring jewelry company and just look at price action. We're all subject to those biases. And, as long as they don't end up costing you money by, holding a loser, it's much better to have a stock that you miss out on instead of losing money. I'd also mention INVA, and that's taking off beautifully here. This one, I'd mentioned it a couple times in last Friday's video, so maybe you're involved in there. hopefully you are. That's been a nice break of that stage one accumulation as well. And this is the pattern that has led to such strong movements lately, is breaking out of a stage one in that shorter term, on the weekly time frame. RPD continues to behave well. It's kind of choppy, but I still believe it's headed for that low 60 range in there. What were some of the other names we had mentioned? Did I say ACHR? Because that's that little EV. It's not an EV. It's I guess it is an electric vehicle. It's aircraft though, electric aircraft. So that one behaves well. There's just a lot of good setups in there. I'd mentioned on Thursday, Hive, that this is one of those little crypto miners that has some room to catch up. So keep an eye on that. ISRG, I think next week you keep a close eye on that one. Amgen looks like maybe something could happen here. It's probably a couple days away. It needs to kind of tighten up a little bit and then perhaps get going. But let's go back to the indices and look at the semiconductors. As noted, this market, just like the semiconductors, broke down below the 5-day moving average. And during this time, to me, it was simply an avoid. Just because we have a downtrend on this time frame doesn't mean I want to short it. Maybe for quick intraday stuff, but I don't want to short it. Not when we have a primary trend that's so strong and we have a market that's holding on the weekly basis to all-time highs. That is the most bullish thing a market can do. This is just noise in here, and what we're waiting for is some alignment of trend. If we see something like this and then it tightens up and then we can buy, let's say right here with a stop under there, then that bigger trend can continue. That's called trend alignment. Maybe it sets up this as a shoulder ahead and then creates a shoulder here on the right side through the middle of next week, and then perhaps we could see some nice resumption of the upside in the semiconductor stocks. Biotechs, as noted, they are coming into a level that has been important previously, and now I think that if you're long this group, you've got to be really careful. I was suggesting stops up here, which would have been hit. So that is, for an aggressive portion of your holdings, if you're swing trading this from down here somewhere, that you should be out of at least a portion when it does that, and if it breaks down, get out of the rest. But I think just looking common sense at where has it come from 64 to up to 83, that it's due for some pause, some profit taking. Maybe it'll be similar to the S&P 500, which is kind of, it's just been grinding higher and sucking in short sellers, and Nasdaq more correcting through time. So perhaps the biotechs correct in that manner, but it's had a good run, and you certainly don't want to be a buyer up here. It's time to be much more defensive in that regard. And same is true for the Nasdaq. The financials, and that's what we spoke about. Is it's had this big run up into this prior band of importance. It doesn't mean it will break down. I outlined a potential scenario. That potential scenario didn't occur, so there's no reason to take a trade like that, of course, especially when the primary trend is higher. So I'm looking at the financials as a group that needs to rest and not be bought, but just let them rest. Energy names, they continue to be garbage here. They're stuck below, they made a lower low this week. So we've got a very clear pattern on the daily time frame of lower highs and lower lows. We're below declining 5-day moving average. Oil itself, here's the weekly chart of oil, and oil, you can see on the weekly time frame, is down to the anchored volume weighted average price from the COVID low and the pre-COVID high. So this band in here is where I think that the oil market ought to probably settle in a little bit. I don't trade oil, but it's interesting to look at and see how it is for the overall economy. If I was an advisor to the energy department, I would say start filling up the strategic petroleum reserve down in here that you've drained. The Ethereum I've spoken about the last 3 weeks, and it's done exactly what it was supposed to do. It rallied beyond this anchored volume weighted average price from the all-time high up to the next level of interest. As I mentioned on Twitter, I sold some of this just on Thursday, and holding still a good portion with a longer-term holding period in mind. But that will do it. Hope you had a good week of trading, and enjoy the rest of your weekend.